We are a global medical REIT. We are a national owner of outpatient medical, so serving the silver tsunami. We have about 5.2 million feet in 35 states and 190 buildings. Our typical tenant is a surgeon or physician's practice. Actually, we have a fascinating origin story. We were started by a Thai industrialist who had done some reading on REITs and wanted to start one. And our founder, Jeff Bush, was friends with them. And so he said, well, let's do it. Let's start one. The advantages that I think we have as a REIT is we have permanent capital. So, it's permanent unless someone decides they want to buy the business. But we can work with counterparties, our tenants, hospital systems, physicians groups, and really take a long-term approach. We're well capitalized, so many of these buildings might be owned by families, and they get what's called good news money. They sign a lease, and they have to put in a big tenant improvement package and sign a big leasing commission, and that can be hard money to borrow and hard money to come up with if you're a family. So we're well capitalized. We really understand the space. We have a team of folks who've been in and around medical for their whole career. So we really, I think, probably differentiate ourselves by being able to underwrite these systems and practice groups in secondary and tertiary markets. And then we're a great long-term partner. We IPO'd in 2016. So next year will be our 10th year as a public company. Sure, the bull thesis is clearly the silver tsunami. So we have an aging population. People spend most of their money on healthcare, after they turn 70. So we have just a very good demand set up. On the supply side, we definitely are seeing less supply being built. Costs are really going up, and those costs pull through to a pretty high rent. So if you and I were physicians, we would probably prefer to stay in a building. One, our customers come there, they know where it is. That's important to us. We're probably near a facility that we have a referral pattern with. So there's a lot of reasons for our customers to want to stay in their buildings, both from the dynamics of their business and how they serve their customers, and from a cost perspective. And so we are a real value proposition for those docs. The bear thesis, particularly if you look at it set against other healthcare real estate, in particular the SHOP, the senior housing where they're participating in the rents. The bear thesis is, or the pushback I think would be, we're not growing rents nearly as fast as some other healthcare real estate is right now. So if you went and you looked at industry data, what you'd see is 2 to 3% rent growth for probably the last 20 years with almost no interruption. Whereas the other spaces would have a lot more volatility. The government changes how they reimburse, or there's a lot of different things that happen. COVID happens, and we didn't experience much rent disruption during COVID. If you owned a senior facility, you certainly did. So we are less volatile and we are lower growing. I think that's probably the most damning thing you could say about us. Yeah, I think if you look, I think we have a couple different peers depending on how you look at it. We have Sila, who was on this program last week. It's a great company. There's Healthcare Realty Trust and DOC, HealthPeak. And HR, Healthcare Realty, is a much larger company. Sila is also a larger company and we probably don't look exactly like either of them from a portfolio basis. We're really focused in the secondary and tertiary markets. We believe there is value there, particularly if you're lined up with a dominant physician or system. And so that's what we're looking for. Good facilities that are less susceptible to new competition in the form of spec office buildings. So if you own, a top 20 market medical office building with a fantastic hospital, it's likely that someone may try to build another building to accommodate those doctors, and they'll start at 50% occupied, and then they'll come and try to take your customers. If you're in a smaller market, those people still need healthcare. You're less susceptible to spec development, and we think that there's less capital chasing these assets than some of those larger markets, and that drives return. So, and you can see that we just did an acquisition in the first half of this year. Great acquisition, really strong returns, and we didn't see competition from some of the other names I just talked about.